Yes, yo. Hello, guys. It's your boy David Capable in the building, and I'm here as usual to simplify the intricacy and complexities in forex trading. As your anchor man today, I want to urge you to relax and pay rapt attention to the subject matter trendline trading strategy. Before we digress into the topic, I would like to create a mental picture by using a prototype scenario to you. Before you get to a particular location, what you need to know first is to find your direction to that particular location. And that is the reason why we are actually looking at trend line. Once you open the forex market chart, the first thing to know is to get the direction. And this trend line unveil and decode the direction of a given pair to you in a forex market. And that is the reason why we need to look at it very critically. So let's go in details about this trend line and how we can use them to our own advantage to take advantage of the forex market. So guys, sit back, relax, grab your popcorn as we critically look at trend line. A trend line simply involves using a straight line to connect series of highs and lows. And these highs and lows serve as resistance and support level. Now, when you use a straight line, which is usually slopy in nature, to connect series of highs and lows, or to connect swing areas, we actually said you have drawn what? A trend line. So we're going to be looking at it pictorially, how this particular trend line can be drawn. But before we can look at it pictorially, we need to understand one very important key. Before you can actually draw a correct and appropriate trend line, you need to keep this particular key point in the back of your mind. First and foremost, focus only on the major swing points and ignore everything else. Like I said, the forex chart entails a lot of swing areas or points that could be confusing. You are only just to focus on the major swing points. The next thing to do is to connect at least two major swing points. Minimum of two major swing points are meant to be connected with that straight line. Remember, the straight line has to be slopy. Okay? Now, adjust it so that you get the most number of touches. Meaning, the trend line you have to draw, you can actually adjust it. It's flexible. You adjust it across the candlestick body or the candlestick wick. Very simple. Also note, do not force trend line. It is not rigid. It is not static. It is not stereotype. It is flexible. So flow with it. Draw it seamlessly and very simple. Always remember to make it what? Slopy. A trend line is slopy in nature. It is not just an horizontal straight line. If you draw a horizontal straight line, you are not drawing a trend line. Rather, you are drawing either a support or a resistance line. So with these characteristics that makes up a good, accurate, and proper trend line at the back of your mind, you'll be very good at what? Drawing a trend line and also taking advantages that the trend line presents in the forex market. Pictorially, like I said, the forex market comprises of a lot of structures. Basically, it has what is called trendy structure, the ranging structure, and the Chobi structure. Now, the trendy structure comprises of the downtrend and the uptrend. We're not going to be looking at the ranging or the Chobi. We're going to be looking just the trendy. because that is the one you can actually get to understand how to draw the trend line properly. Now, in a downtrend, meaning the market is going down or sellers are taking over the market, or we can call it a bearish market. This is an example of a downtrend, of a bearish market where sellers are taking over. You can see a straight slopy line cutting across the candlestick wick areas. You can see the way it's touching it, and there is an arrow pointing where it's going. This is an appropriate way to draw what? A trend line in a downtrend market. Then how do you also draw the same trend line in an uptrend market? Let's look at it pictorially. Pictorially, look at how it's actually drawn. You can see the same line is being drawn, but this time around it's coming below. It's at at the swing low area. Swing low. Remember we said it cuts across the swing area. The swing point area could either be swing high or swing low. Now this is a swing low area. The line is cutting across it, and that line is coming from the left hand side and going to the right hand side, showing the direction the market is going. The same line also is coming, if you are showing it on a downtrend, coming from the right and left hand side and going to the right hand side. So it is slopy. It is drawn from the left to the right hand side. Very powerful. But there are also some cases where people draw this trend line both on the swing low area and on the swing high areas, like this. Look at it. You can see this is an uptrend. But what are you seeing on the uptrend? On the uptrend, there is a line. There is a line where there is a line above and there is a line below. It's an uptrend because the market is going up. It's coming from the left hand side and going toward the right hand side, and is tending up. When the market is tending up, there is a line, the one drawn above, which is the swing high area. You can see, you notice that a trend line is drawn across there, and there's an arrow, red arrow, showing you that place is a point of resistance. If you come down and that trend line is drawn and is pointing using the green arrow, telling you that this place is a point of support. The whole essence of the trend line is just to show you the direction of the market, the channel, because what we drew now shows us that this particular market trend has a channel. It's passing through a channel. It's going through a channel, and that channel is an uptrend, and that channel comprises of the support and resistance. You have to buy at the support trend line area, then you have to sell at the resistance trend line area. Very simple technique. Now we're going to be looking at it on our trading view. Now this is our trading view. Let me zoom it clearly. Now in our trading view, this is 4 hours time frame. You can actually use any time frame. Okay, you can actually use any time frame. You're not being stereotyped to a particular time frame, because we have different types of traders. We have day traders, swing traders, scalpers, and naming them. Whatever time frame that is suitable for you is okay. You can pick it to draw your trend line. In this case, I'm only using the 4 hours time frame because I may be using the 4 hours time frame and the 3 hours time frame in this particular video. Now, in this 4 hours time frame, first thing I did was to draw a trend line. Okay, I draw a trend line. If you want to draw a trend line, all you need to do here is to go to this plus sign, go to this drawing, then you see trend line. Okay, once you pick it, you pick the tool trend line, you can come here and draw it. That's all. You drag it across. So that's what I did. I drew it like that. I drew it also above. Now if you click on the blue line, you can actually color it, change the color. I've changed the color to blue. The blue color are coming below the swing low area. I'm telling you that this place is my support zone, while the one above, which is the red one, the red line here, which is slopy but going from the left hand to the right hand, shows that is a resistance area. So the market is tending as form a channel that is going upward. Okay, now remember in our classes where we talked about market structure, in my video you're going to watch that, you understand that I spoke about higher highs and higher lows. The uptrend, it comprises of what? Higher highs and higher lows, while the downtrend comprises what? Of the lower highs and lower lows. Now this is an uptrend. The red area is actually the higher highs area, higher high area or higher high swing area, while the one below, that's the blue area, is actually the higher low area. Do you get it? So now in this video, this is just a typical example, very perfect way to draw a trend line. Okay, there may be some exceptional cases where this market may actually break the trend line. Yes, we know, but in this video we're not talking about breakouts. I'm not talking about breakout. I have a special video where I'll be talking about where there is a breakout. Now, how do you trade breakout? In that video you find out about that, but we are talking about how to draw a trend line and how you can spot opportunities on this particular trend line, because there is a pattern the market is going. So at that pattern, it forms a resistance and it forms a support. You buy at the support zone of the trend line, then you sell at the resistance zone of the trend line. Very simple. So let's go back and continue. Now, how to find entries using the trend lines? There are some things you look out for as a traders or as traders, okay? As traders, to actually know exactly where to enter the market from. These are guidelines, okay? They are guidelines to help you when you are using trend line strategy to trade. The first thing to understand when you are using a trend line strategy is that it is advisable for you to trade near the trend line region. Remember, the trend is your friend. Do not trade against the trend. The trend is what? Is your friend. When you open a market, the first thing to do is to go to a higher time frame and know exactly the trend of the market. What trend is the market tending towards? Is it uptrend, bullish trend, that is bullish trend? Is it downtrend, that is it going bearish? That means buyers are taking over. You need to understand that first. Then if you do that, then you should be trading within the trend line. Once you identify that, draw your trend line, wait for the market to come to the trend line region before you enter or you exit. Very simple. Number two is that when you draw this particular trend line, remember we said there are areas in that trend line. When you draw the two trend lines, where you have the one I drew previously, I drew one that is red at the top, at the swing high area, and I drew another one below, which is a swing low area. Remember that this trend line comprises of support and resistance, okay, on these swing areas. The trend line comprises of what? Support and resistance. And these are the perfect way you can actually get your best winning opportunities in forex market. If you allow the trend line and the support and resistance to guide you, definitely you will know how to pick your best winning opportunities. So always combine your trend line and your support and resistance to get the best of the forex market. Number three, wait for the market to get to the trend line area where the trend line meets the support and resistance. Okay? Wait for it to get to that point. The trend line goes both above the swing high and the swing lows, which serve as your support and resistance area. Wait for the market to get to that point before you place either a buy or a sell. You place a buy at the support zone where the trend line is, on the support zone. Then you place a sell where the trend line cut across on the resistance zone. Very simple. Okay? Now, when you get to that particular point, there are also some triggers there are some triggers. We call them triggers because they are pointers to tell you, okay, now the market has gotten to your support zone, where the trend line passes through the support zone, and it has gotten also to the resistance zone where the trend line passes. But there are some things you will see and say, okay, it is now due time for me to sell. And those triggers are candlestick. We call them candlestick because those candlestick will tell you the number of rejection it has faced in that area, either on the support zone area or the resistance zone where the trend line is, or cut across, to be able to tell you, okay, it is time for you to buy or to sell. Very important. Those triggers could be in the form of candlestick, and those candlestick can either be doji candlestick, pin bar candlestick, engulfing candlestick, hammer, etc. There are many of them. Okay? When you see those candlesticks on where the support and the resistance and the trend line meets, you will know that they are telling you that it is due time for you to actually place a buy or to place a sell. Also, remember, we also have chart patterns. There are some chart patterns that it will form in this area of the support and resistance where the trend line cut across, that it will tell you it is time to sell or to buy. I made a full video on chart patterns where we talk about the double top, the double bottom, yes, and the head and shoulder, the inverse head and shoulder. So many chart patterns. These chart patterns, they serve as a trigger. In fact, in this video, I'm like as if I'm trying to put everything together. That is why you need to watch my videos where I talked about candlestick. Okay, watch my video about candlestick. Watch my video also where I talk about top-down analysis. I also talk about this particular chart pattern. So these things also come into play when at the region of the support and resistance where the trend line cut across. You have to watch out for that triggers. Okay, you watch out because that is where you can actually know exactly where to enter. Now we will still go back to this example here. Now this is this Euro JPY, the 4 hours time frame. Okay, you can see this is what I did. After drawing the trend line, the first one, which is the red line for the resistance zone, I drew another trend line, which is blue, which shows on the support zone. Okay, now this is it. I want you to get a particular picture. Now I can actually this one here that I highlighted just now, this one I drew it by coming to plus sign, going to drawing, then I pick a rectangle. There's a rectangle, call it the rectangle tool. Some people don't actually use the rectangle tool, but it's here. Okay, look at it. This is the rectangle tool. When I come here, I drew it like this. Now you can see the rectangle tool. It has connected some peak. These peak areas here. There is a peak area here. There is another peak area here, and there is another peak area here. Those peak area, the high areas, are the resistance zone. I drew a straight line. Instead of drawing a straight line, I use a rectangle. Same way also on the swing low area, you can see I drew another rectangle, but this rectangle is colored blue. Those are what? The support zone. Now, if you notice, there are times where the market was going up. As it was going up, it came to this resistance area here, where the trend line actually met the resistance, that red point here. What happened? The market started coming down. But look at the trigger. There is a trigger around that place. Let me show you the trigger that happens in that place. There is a trigger candlestick that happened in that area. Now this is a trigger candlestick that happened there. Look at it. There is a hammer there. Look at this hammer candlestick. You can see this hammer candlestick, which shows a rejection. Okay, this hammer candlestick. This candlestick here, I want to highlight this thing. I will use something to highlight it so that you can get it clearly. You understand what I'm saying? Look at this hammer candlestick here. This hammer candlestick. Okay, it's a reverse hammer candlestick. You can see the reverse hammer candle. I'm using this to point it out. You can see the reverse hammer when you get to the resistance zone, and also there's a trend line across it. Okay, it means the market will start coming down. So these are key things. These are what triggers. It shows where the resistance zone is, okay, where the resistance zone is, and where the trend line also cut across. You can see there's a hammer there. This thing is also applicable if you look at this particular place. When you get to this particular area too, you can see when you get to this particular area, there's another trigger here. I'm seeing another trigger. You can see some rejection candles here. You can see a doji, I can see a doji, I can see a pin bar. Are you seeing? You can see them here. And not change. It means it has tested this particular region, the trend line cut across, and it's too strong for it. What happened? It started moving up and going up. That's changed direction. So these are very key and very important. Okay? And also, if you notice again, in this particular area again, let's come down to this area. When it came to this support zone again, it forms what we call something like a double top, a double bottom. I mean to say, you can see a double bottom. A double bottom is something like looks like W, like this. You can see it like a shape of W, and started moving upward. You get it? It forms a chart pattern, which is like a double bottom chart pattern on the support zone, and started going up. These are triggers. Now, if you look also here, there is also, if you look also here, let's use the chart pattern. You can also see there is a double top here, but this double top is like triple top. We have one top here. I like using practical examples. There is one top here, there is another top here, and there is another top here. You get it? So it has even showed you that there is what? There are triple tops here. 1, 2, 3 tops. Even here, it also shows, this is also an example of not just a triple top. It can also show as examples of other chart pattern like other chart pattern like we call it head and shoulder. A head will be in the middle, while there will be shoulders beside it. The candlestick will form like something like shoulder. If you watch my video on this candlestick patterns, you're going to understand that properly. So when they are formed, when the candlestick patterns are formed across where the support zone are and where the trend line cut across, it means it is actually time for you to sell, because you can see it actually form what? A double top at the resistance zone where the trend line cut across. It means start selling. The same thing happens here. There is a double bottom here on what? On the support zone where the trend line cut across. It means it's a trigger. It start what? Buying. Very powerful. So with this, I've been able to explain to you how you can actually work with this thing to take advantage of the market. So let me just give you a recap of everything. Now this is a recap. First, when you get into the forex market, identify the trend. The first thing is to identify the trend in the market. You can draw a trend line by connecting the lows in an uptrend or the highs in a downtrend. Now, an uptrend is characterized by higher highs and higher lows, which I've said, while a downtrend has lower highs and lower lows. So you identify the trend of a market first. Okay, when you log into your either MetaTrader 4 or MetaTrader 5, you identify the market trend first. That is the first thing to do on a higher time frame. Okay, so this is an uptrend. You can see the uptrend is characterized with what? The higher highs and higher lows. You can actually see this thing if you convert your chart to a line chart, because most times some people leave their chart on candle chart. Okay, so if you convert your chart by going to your settings in either your MetaTrader 5 or MetaTrader 4, you go to your settings, you convert it to line chart, you can see the chart pattern properly. If you convert it to a line chart, you'll be able to see the chart pattern properly. Okay, and you also be able to see the market structure properly. Yes, you see structure of the market properly when you convert to line chart, because many people do not really understand the candlestick pattern, but this is it, but it's still the same thing. So you can see The uptrend comprises of what? Higher highs and higher lows, while the downtrend comprises of lower highs and lower lows. These are the swings area, okay, which is very simple. Then number 2, you have to draw your trend line. I've shown you how you can draw your trend line. You draw an up trend line, connect at least 2 lows, and for a down trend line, connect at least 2 highs. The trend line should act as a support line in an uptrend and a resistance line in a downtrend. Very simple, which I've said already. Okay, and this is it pictorially, because when you see it in picture, you understand it better. Look at this is a downtrend. You can see as it's downtrend, the line is going down. It means the trend line that is going down from the upside, okay, will tell you is a sell zone, is a resistance zone, which is a red line. Then the one, the green line, which is down beneath it, shows you what is a support line. Very simple. Okay, so you have to find your buy at the support line, support trend line, while you find your sell at your resistance trend line. Very simple. Number 3, you are to look for area of entry and exit point. In an uptrend, look for what? A buy opportunity when the price approaches the trend line and bounces off it. So when you are seeing an uptrend, we see the market is an uptrend, all what you'll be looking at is for buy opportunities, and the buy opportunities can only be found at the support zone. Very simple. Then if it's actually a downtrend, what are you going to be looking at? You will just be looking for sell opportunity. This can be a potential entry point. In a downtrend, look for sell opportunities when the price approaches the trend line and bounces down it. Remember, before it bounces off it, before it bounces at the trend line, remember there will be some triggers. I've mentioned those triggers, those candlestick triggers, and I also mentioned the chart patterns triggers too. There are 2 triggers, either the candlestick triggers, which are made of either the doji, the hammer, the pin bar, while the chart pattern triggers could actually be the double top, yes, and double top or head and shoulder, like that, like I said, and either maybe double bottom, head and reverse head and shoulder. There are so many chart patterns. Those are triggers too. Okay, so this is it. You can see this is an uptrend. It shows you this is where to buy, like that. So you're looking for buy opportunity like that. Only look for entries in the direction of the trend. Very simple. Remember this in the back of your mind. Only look for entries in the direction of the trend. If it's an uptrend, look for buy opportunities. If it's a downtrend, look for sell opportunities. Now this is also a very good pictorial example of it, which I want you to keep in the back of your mind. This is very, very quite interesting and very depthful. This topic is depthful. Please, it's very understandable, very simple. With this topic, your risk management will be top notch, because you can set your stop loss orders to manage your risks. Place your stop loss just below the trend line in an uptrend, okay, or you just above the trend line in a downtrend. This will help you limit potential losses if the trend goes against you. Okay, so with that, whenever you are putting your entries, you put your stop loss above the trend line area. If you want to sell, okay, then if you want to buy, you put your stop loss below the trend line that is below. Very simple. Okay, I hope this video has been very, very helpful and you are understanding it. And always remember that there are confirmations. Like I said, those rejection candles are confirmations for you. All the chart patterns, they are confirmations. The rejection candles are they are triggers. It's always a good idea to use additional technical indicators. Some people make use of technical indicators. Like one of the strong technical indicators people use, they make use of moving averages, RSI, MACD, Gersan. These are technical indicators. I have discussed all these technical indicators in my videos. I've done videos on moving averages, RSI, that's relative strength index. I've done videos on that. You can combine those ones with what we have said so far to make your strategy more powerful and more up to date. So guys, this is just what this video is all about, just to help you to identify opportunity by using the trendline trading strategy. I remain your boy, David Capable. Thank you guys.